What if I told you that the app promising free trading for everyone is actually robbing you blind? That the company named after a legendary outlaw who stole from the rich and gave to the poor is actually doing the exact opposite? Imagine this. A retiree, barely scraping by on Social Security and their retirement savings, switches to Robinhood, thinking they're avoiding brokerage fees. They've worked hard their entire life, set aside money, and just want to make their funds last. But month after month, they notice their balance shrinking. Hidden fees, bad trade executions, and sketchy financial tricks slowly drain their money. At first, it seems like a mistake, but as they dig deeper, they realize something isn't right. Suddenly, they can't afford groceries. Their heating bill goes unpaid. The dream of a comfortable retirement is slipping away, all because of an app that claimed to be on their side. Or picture this. A college student finally saving up for a down payment on a house, working extra shifts, being smart with their money, only to realize Robinhood has been nibbling away at their profits every step of the way. They thought they were making responsible investments, playing it safe, slowly building up their future. But a few cents here, a few dollars there. It doesn't seem like much until they check their account and realize hundreds, even thousands, have vanished. You might be thinking, wait, isn't Robinhood commission free? How is that possible? That's exactly what they want you to believe. Robinhood isn't here to make you rich. It's designed to take advantage of you. By the end of this video, you'll see exactly why Robinhood isn't just a bad app. It's a financial crime scene. And more importantly, you'll know how to protect yourself and what you can do to fight back. But before we get started, have you ever lost money because of Robinhood? Whether it was bad fills, a block trade, or hidden fees, drop a comment below and share your story. The more people speak up, the harder it is for them to keep getting away with it. Stick around, because the best way to win is to know the truth. Robinhood was founded in 2013 by Vlad Tenev and Bailout, two Stanford grads who claimed they wanted to democratize finance. They marketed it as an app for the little guy, a way for everyday investors to trade stocks for free. At first glance, it was revolutionary. No commissions, no fees, easy-to-use mobile interface. It seemed like the perfect platform. But then ask yourself, if something is free, how is the company making billions of dollars? That's when the cracks start to show. Robinhood doesn't make money the way you think it does. It profits by selling your trades to high-frequency trading firms that bet against you and exploit tiny price differences to make millions. This process is called payment for order flow, and it's the reason why your trades often execute at worse prices than they should. Every time you make a trade, you're not just moving stocks, you're handing Robinhood a golden opportunity to make money off of you, quietly, behind the scenes. So yeah, you're not paying commissions, but you are paying. You just don't realize it. Let's talk about the masterminds behind this operation, Vlad Tenev and Bailout. These guys positioned themselves as Silicon Valley disruptors, but in reality, they built a casino, not a brokerage. Think about it. Why does Robinhood's app look more like a gambling app than a financial tool? Bright colors, dopamine triggering confetti, constant notifications pushing you to trade. Why do they care so much about you trading? Because every time you place a trade, they get paid. And let's be real, if this was any other app that made money every time you used it, it would be labeled an addiction. Imagine if Uber charged you extra every time you refreshed the app, if DoorDash secretly added fees based on how often you checked for food. That's exactly what Robinhood is doing. If they truly cared about your financial success, why would they push risky options trading on brand new investors? Why would they design an app that makes investing feel like a game? They don't care if you win or lose, because either way, they're making money. At this point, you might be wondering, if this is all true, wouldn't regulators have done something about it? Oh, they have, over and over again. Robinhood has been caught and fined multiple times for misleading customers. Let's go down the rap sheet. 2019. FINRA fined Robinhood $1.25 million for failing to ensure customers got the best prices on trades. 2020. The SEC fined them $65 million for lying about how they make money. 2021. They got hit with a $70 million fine, the largest in FINRA history, for misleading customers and approving inexperienced traders for risky options trading. So let me ask you, if a company keeps breaking the rules and just pays fines, is that a company you should trust with your money? Now let's talk about the moment that should have killed Robinhood. January 2021. The world watched as retail traders on Reddit's Wall Street Bets took on hedge funds by pumping up the stock of GameStop. Robinhood claimed to be for the retail investor. This was their moment to prove it. Instead, they shut down buying of GameStop. You could sell, but you couldn't buy. And that single decision caused the stock to crash, costing everyday traders millions while bailing out the hedge funds who were losing billions. Robinhood's excuse? Clearinghouse requirements. But ask yourself, why was selling still allowed, but not buying? Because they didn't want you to win. At least when you get robbed at a real casino, they give you a free drink or a crappy chicken dinner. Robinhood, they just take your money and throw some confetti in your face. If you're stuck with Robinhood but don't want to get ripped off, here's what you can do. First, I want to let you know, I care about exposing the truth, and I'm not stopping here. But I can't do it alone. If you want to see more hard-hitting content like this, completely free, unlike Robinhood, smash that subscribe button. Robinhood wins when people stay quiet. My game is exposing them. Let's make some noise. To keep yourself safe, use limit orders instead of market orders so you control the price you pay. Avoid trading on margin. Their interest rates are brutal. Withdraw your money frequently to prevent unexpected account holds. Turn off push notifications to avoid FOMO-driven trades. But honestly, you should just switch brokers. A well-established brokerage like Fidelity, Schwab, or Vanguard won't play games with your money. They offer better trade execution, real customer service, and don't make a business out of secretly profiting from your trades. Stay smart, stay skeptical, and most importantly, stay in control of your money.